Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you how to dollar cost average into LEAPS option. That's right. You heard me correct. We're going to DCA into LEAPS options. Now, if you're new to options trading, I'm going to try to make this as simple as possible. However, if you're trying to use options in order to generate consistent income, then this is definitely the right video for you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to show you a couple LEAPS option that I'm going to be dollar cost averaging into. I'm going to show you my current positions and what I intend to do to add to my positions. And then finally, I'm going to show you how I'm going to use these LEAPS option in my portfolio in order to make consistent income. If this is something you're interested in, definitely keep watching. Now, you guys know how we do it on this channel. We're going to go ahead and get down and dirty with options. Now, when we say we're going to get down and dirty with options, it simply means we're going to give you an exact walkthrough of what we're doing in order for you to be able to follow along with us. And if this suits your fancy, then maybe you could practice with your own portfolio. To get us started, we're going to be using SMCI or super micro computers. So right now I'm on one of my calls for Supermicro. This is the $30 call right here, and this is a LEAPS option. So let's go ahead. I'm going to give you the details. So as you can see here, this is a LEAPS option that expire January 16, 2026. The average cost is 1070 or $1,070. Currently, it's trading at a price higher than what I paid for it, which is $11.83. The result of that is that I'm currently up on the position of $113 or about 10%. Now, although the market is in a strong decline, personally, I believe this is the right time for me to add to my position. So here's what I'm going to do. I'm going to go ahead to view all options, and that's going to open up the option chain. For those of you guys that are new to the channel, or if you're new to options trading, this entire area down here is known as the option chain. Now, what the option chain does is that it gives you enough information in order for you to make an informed decision. Now, we're going to be going ahead to buy, we're going to be going ahead to call, and we're going to choose our expiration date. Now, in order for it to be a LEAPS option, it must have an expiration date of 1 year or more. Just for the purposes of this video, we're not going to have an exact 1 year out. So we will be using the March 20th, 2026, and that's going to give us around 344 days to expiration. Let's go ahead and select that. Now we're going to go ahead and we're going to choose our strike price below the current share price. Now I do highly favor the $30 strike price based on my own personal research and my own personal risk tolerance. Now, for the $30 strike price right here, we're going to have to pay, because we're buying an option, the amount we're going to have to pay is going to be $13.15 or $1,315. And that simply because each option contract contains 100 shares. So you simply multiply 100 by 13.15, and that's going to give you $1,315. So once we go ahead and select that, we're now going to add that LEAPS option into our portfolio. That's now going to take me up to 2 LEAPS option. Now, LEAPS option stands for Long-Term Equity Anticipation Securities. LEAPS option is an option strategy that could help boost your options portfolio. Now, why would anyone want to pick up a LEAPS option in their portfolio? Well, it's quite simple. A LEAPS option allows you to control 100 shares or more of a stock at a much lesser price than it cost you if you were to purchase 100 shares of the stock outright. So, just using this example, if you were to buy this LEAPS option, it's going to cost you $1,315. However, if you were to pick up 100 shares of the stock, it would cost you $3,380. So, LEAPS is pretty much like a cheat code. Now that you have a LEAPS option in your portfolio, this is how I go ahead and use LEAPS option in order for them to make consistent income. Now we're going to go ahead and we're going to be selling covered calls against our LEAPS option. Selling covered calls is another option strategy that allows you to use your LEAPS option in order for you to generate income. So in order for you to do that, you simply go to sell and call, and then you choose a strike date, but this time you're going to choose one that's a lot closer. Now we're going to be going with April 25th, which gives us around 14 days or 2 weeks to expiration. Now, as opposed to the LEAPS option where we chose our strike price below the share price, in this instance, we're going to choose our strike price above the share price. So let's go ahead and look for an ideal strike price by going up high above our current share price. The strike price I will be going with is going to be the $43 strike price right here. Now, now we switched around and now we're going to be selling options. Now, whenever you're selling options, that generates you income. So for the $43 strike price, I'm going to be receiving 0.32 or $32. Let's go ahead. We're going to hit that. We're going to hit continue. And now we're going to hit 2 contracts. So once I'm able to sell my covered calls now against 2 LEAPS options in my portfolio, I will now be able to generate around $64 consistently over every 2 weeks. Now, I do have these detailed videos about how I choose the strike prices, how I choose the chance of profitability. So go ahead and check out those videos. Now, let's keep a close count. That's now $60, and that would take you less than 2 minutes in order for you to do this trade. Let's go ahead and jump into the second stock that I'm using in order for me to dollar cost average into LEAPS option. And for that, it's going to be Robinhood, ticker HOOD. Okay, so here we are on the Robinhood markets or Hood. And as you can see here, I have the $42 call. Now let me go ahead and show you the details. So once again, this is another LEAPS option I have in my portfolio, and this one too expires January 16, 2026. Now, before I go ahead with this video, I want to ask you guys to do yourself 2 favors. Always make sure you do your own due diligence before investing. What might work for me may not work for you. Also, always make sure you have an exit strategy before entering any options trade. Now let's go ahead and continue with the second stock I'm using to dollar cost average into LEAPS in my portfolio. So the average cost of this LEAPS option was $12.12. Currently, it's trading down. It's now trading at $10.45. The difference of that is that I'm now down $167 on this LEAPS option. Remember, the previous one I was up. Now this one I'm down. The amount I'm down is around 13%. Now I'm going to go ahead and show you how I'm going to add to this position. And once again, we're going to go to view all options down to the bottom. Now, once again, we're going to make sure we go to buy. We're going to go to call. And remember, these are LEAPS option. So we need to choose a strike date, a year, or beyond. But we're going to be using the exact same one, which is going to be March 20th, 2026. That gives us around 343 days to expiration. Remember, we don't have an exact 365, so it's either March or it's the January. The January is way too far out. So we'll settle for the March 20th. Now that we have the strike date in order, now we're going to go ahead and choose our strike price. The strike price we're going to be choosing is going to be below the share price once again. And then this time we're going to be going with the $40 call. Now I did just show you, we bought our share price of the previous LEAPS I show you below the share price. And this one, we're going to be buying below the share price once again. Stay tuned for the third one. I'm going to show you with that one, we're going to need to buy it above the share price. So with the $40 strike price, once again, we will be buying and we're going to have to pay. The amount we're going to have to pay is going to be $12.95 or $1,295. Now that we have this LEAPS option in our portfolio, once again, we're going to go ahead and use it to make consistent income. Now we're going to switch over the strategy now and go to sell and call. And now we're going to go ahead and choose a closer strike date. The strike date we're going to be going with once again is going to be April 25th, which gives us 14 days to expiration. Remember, this is what I do on a regular basis, and this is what I'm doing with my portfolio in a bear market. So you can still make consistent income out there, no matter what the market gives you. Always take what the market gives you and use it in order for you to generate income. Never fight against the market. Now I'm going to go ahead and choose my strike price. Once again, I'm going to go with the strike price above the current share price, and I will be going with the $50 strike price right here. Now, with the $50 strike price, because we're selling once again, we're going to be receiving money. the amount of money we're going to be receiving is going to be 31 cents or $31. Now, before I continue, let me just give you guys a little added tip. If you guys notice, my chance of profitability is extremely high. The reason for that is that the whole purpose of you buying leaps in your portfolio is that you're of the mindset that the share price is going to appreciate over time. So the whole point is for you to benefit from what's known as investment gains or capital gains. So in order for you to almost get that surety, you need to choose a very high chance of profitability so you're not assigned on your leaps. Once again, I do have videos of every single stock that I have here, but when I picked up the first set of leaps option. So go ahead and check those out. So let's go ahead. We're going to click into it. We're going to hit continue. And once again, we're going to go ahead and choose 2 contracts. So once again, $62. The first one was 64. This one is 62. And that is how easy it is to generate consistent income even in a down market. Now let's go ahead. I'm going to show you a third leaps option that I'm going to be dollar cost averaging into. And for that is going to be TTD. Okay, so here we are on TTD, and this is the third leaps option in my portfolio that I'm going to be using the DCA method on. Once again, we're going to go to buy, we're going to go to call, and we're going to choose our forward expiration date. We're going to be going to March 20th, 2026. Now, these strategies are extremely redundant, and people don't really like it because there's zero excitement in it. However, you do make consistent income very safely. Now, we're going to go ahead and we're going to choose our strike price. Now for this one, the strike price I will be going with is going to be above the share price because I fancy the $50 strike price. Remember, these strike prices here are based on your own research and your own due diligence and your risk tolerance. So now we buying once again, we're going to have to pay, and the amount we're going to have to pay is 12.85. If you guys notice the commonality here, most of these leaps option expiring the 20th of March 2026, they have a cost price of around $1,300. So that's very affordable for anyone trading with a small account portfolio. As you guys know, on this channel, we specialize on helping people with small accounts portfolio grow consistently over time. Now, once again, if you were to pick up 100 shares of Trade Desk right now, you would have to pay $4,976. By purchasing this LEAPS option, you're now going to be able to control 100 shares of the stock for $1,285. Now that we have this other LEAPS option in our portfolio, now we're going to go ahead and maintain the exact same strategy. Now, I have not mentioned this before, but whenever you have LEAPS option in your portfolio and you decide to use those LEAPS option in order to sell covered call, that creates an entirely new strategy. That new strategy is known as the PMCC or poor man's covered call. So the poor man's covered call is a big part of my portfolio. So let's go ahead now and choose a close out strike date, and we're going to be going with the exact same thing, which is going to be April 25th, 14 days to expiration. Now we're going to be choosing our strike price above our share price once again for our covered calls. I will be going with the $60 strike price right here. Now, I did mention this previously. I'm going to mention it once again. These strike prices I'm choosing is not random. These are based off my risk tolerance and the research I did before generating this video. So with the $60 strike price, I will be getting 0.39 or $29. Now, whenever you choose your strike prices, in order for you to sell your covered calls, feel free to choose any strike price that aligns with your goals. So you could choose a higher up strike price, which gives you more surety that your leaps is not going to be called away, or you could choose a strike price even lower, which reduces your chances of winning the trade, but it also increases the amount of income you're going to be generating. So continuing with our $60 strike price and our $29, once again, we're going to hit continue, and we're going to be doing 2 contracts this time. So now we're going to be getting $58. So the first 2 leaps we receive around $64. The second leaps we receive around $62. And now we're receiving around $58. Those 3 leaps right there with 6 contracts, that's going to generate us $180. Now you're generating $180 very safely from the comfort of your own home. I would say that's a win-win situation. Now, this is what I do consistently with my personal option portfolio in order for me to continue growing that option portfolio very safely. If this is a strategy that you guys think that you want to try out, or you have any questions about these option strategies, namely the LEAPS option, the covered call, or the PMCC, then let me know in the comments below. If you guys are currently using any of these option strategies in your portfolio, even in this bear market, then I want to know what stocks are you guys using these strategies on. And until the next video, go ahead, like the video, subscribe to the channel, hit that notification bell to get an alert whenever I post a video. But most importantly, we're trying to help as many people as we can. So go ahead and share this video with anyone struggling to grow a small options portfolio. And until the next video, keep pushing your investments.